back. I'm Derek Wilkins with LTC Tree. I'm with my cousin Drew. Today we're going to talk about what's better, traditional long-term care insurance or hybrid long-term care insurance. We get that a lot. So we're going to kind of just really drill down on what are the pros of traditional, what's the cons of traditional, what are the pros of hybrid, what are the cons of hybrid. Drew, how's it going?
Hey, Derek, doing well. Without boring the audience to death, this is a very personal conversation for us because we've kind of been through the progression over the years, decades at this point, of the different types of policies. And it's a question we get every day, like you said, and we have some really pretty strong opinions on it, I would say.
Yeah, I started doing this right out of college in 1998, and for 16 years, traditional long-term care insurance is all we did. It's really all that was out there. And I'd say maybe 2015, 2016, that's when these hybrid plans really got competitive and started offering compelling products. And like anything, there's pros and cons to each. So, kind of thinking a broad brush, Drew, what types of clients are you seeing gravitate towards the traditional?
Yeah, just a quick history thing for me too. I remember when all the rate increases started coming out in 2013, 2012,
Yeah.
sometime around that time frame. I think it was 2012. It really was starting to get pretty big. I told you on a phone call, so this is almost 15 years ago, someone needs to guarantee the rates on these policies because they've lost a lot of credibility. So we fast forward to today, and most of our clients, statistically, end up going with hybrid policies. And there's a couple reasons for that. Having said that, we still sell traditional every single day. So let's unpack, Derek, why people still go traditional when most people are going hybrid. Why don't we start there?
Yeah, so I really think it has to do with a couple things. The first factor is your current health, your real current health. If you're less than healthy and you think you might be using this insurance within the next 10 years, it probably is going to just pay to you do the traditional and you kind of pay as you go because the good thing with traditional is once you file the claim, the premium stops. So, that's really the first kind of, piece of advice I give clients is how healthy are you? Do you think there's a realistic chance that you might need care within the next 10 years? Now, with that said, a lot of our clients are in their 50s, early 60s. Statistically, they're probably not going to, but sometimes we do have clients who maybe they have diabetes, maybe they have, they're overweight or there's a cancer history, where they might need care sooner rather than later. Then it might be, the play would be the traditional. The other aspect, it has to do with finances. Traditional insurance is really appropriate for people with probably $500,000 or less of assets. Because the hybrid plans, you have to pay more upfront and you don't want all your money kind of that you're going to have to live off of for retirement in these hybrid plans. But clients with assets of $500,000 or higher tend to gravitate towards the hybrid plans.
Exactly. So yeah, there's a couple things there, Derek, just to summarize. You know your health better than anybody. We say it all the time. You kind of have an unfair advantage over the insurance companies because you know your health history, how you feel every morning when you wake up, and they don't know all that about you. So you can use that to your advantage to determine whether you should buy something that might be more advantageous. Because yeah, with a hybrid plan, because they are more paid up front, whether single premium or over 10 years, the initial part of any claim, they're basically, if you think about it, they're giving you your own money back, essentially. Um, Whereas with a traditional plan, there's some serious leverage. If you only paid a couple years of premiums and then you had to go and claim, that could be advantageous. But I think the latter part that you mentioned is probably the bigger linchpin in this decision, and that is, if you have the resources to go with a hybrid, it has some significant advantages. And why don't we jump into a couple of the advantages? Why is hybrid such a large portion of the market right now?
Yeah, there's a few reasons that I feel are kind of stand out. And the first, like you touched on earlier, Drew, it's a fixed premium. They can't change the number. So whatever premium you agree to, it's that. Whether you're doing a single premium, paying it over five, or you can pay it off in 10 years. But whatever payment method you choose, it's paid off and they cannot change those numbers. So in summary, the premium's guaranteed. That's a big advantage I see. And the other advantage is going to be it's a diversification play. So again, I say clients who have assets $500,000 or higher, because the goal of long-term care insurance in general is to protect your assets. So if a lot of our clients have $2, $3 million, most of their money still is working for them in the stocks, but like, they can just take, one to $200,000 out of their portfolio, shift it towards the insurance, and by just shifting, 10 to 20% of their assets, they're protecting the whole thing. And then if they never use it, they're going to get the premiums back with a bit of interest tax free, or their family will.
Exactly. So you've got all of those advantages. I'd say the other thing is just in general the trading one risk for another element of it. If you go with a traditional, you're trading the risk of long-term care expenses for the risk of rate increases. So there's that, and just there's just so many advantages that the hybrid have. The cash indemnity is a big thing. People ask about every single day, don't they?
Yeah, yeah. Tell us, why is the cash benefit, kind of like real life examples? Why would that benefit the viewers watching today?
Yeah, so here's where it wouldn't benefit you is if you're in a facility, because in a facility, they're going to send your insurance company an invoice, get paid, no problem. Where it would benefit you perhaps is in a home care situation or perhaps even outside of the country with some of these plans where they'll pay your full monthly benefit without you having to submit receipts every month. And for home care providers, maybe you have an informal caregiver, which is an actual legal definition in many of these policies. That's someone who's not part of a home health agency. They don't know how to put together invoices, and they can still be compensated because you get your full monthly benefit in cash every month with an indemnity plan. So, that's some big advantages. And people always ask me, well, why don't they all do that? Like, why don't traditional do that? And the only answer I can come up with is the hybrid space is just much more competitive. I mean, the companies are constantly leapfrogging each other in the hybrid space with better policies, and we just don't see that in traditional.
Yeah, yeah, that's a good point. Yeah. And like, I think, yeah, the benefits themselves are a little bit more rich, a little more flexible than the traditional plans, but now you're paying a higher premium. So since you're paying a higher premium, what's best to do? Do you want to do a single premium? Do you want to pay it off for 5 or 10 years? That's a question we get a lot. And so again, the answer is it depends. And so the kind of a broad stroke advice I give is, if the money's coming from, say, a CD that's paying you 3, 4%, and you have the money just sitting there, then yeah, probably just do a single pay. But if a lot of our clients are taking money out of their IRAs or investment account, if that investment account has been performing, getting that 8, 9, 10, 11% per year, we love the 10 pay. So it allows you to kind of dollar cost average out of an investment such as an IRA to pay your long-term care premiums over 10 years. So you do pay a little bit higher premium, but you're not giving them that lump sum up front. So you're earning interest on that money over the course of the 10 years. So that's kind of a broad stroke, is if it's coming from a lower paying investment, then maybe you do the single pay or 5 pay. But if you're having good investment results, maybe leave the bulk of it rolling and invested, and then just kind of pay it over time.
What about age bands? Like, if you're in your 40s, which is rare but does happen, a 10 pay is almost a no-brainer. Where would you say the cutoffs are where really we should look at a single premium? What age? I've got a number in my head. I'm curious what you have in your head, Derek.
Yeah, I'd say probably, the people in their late 60s,
Yeah.
67, that's kind of where you probably want to do the 10 pay. But yeah, comparing the numbers, I can tell you've probably been deep in looking at those in the past, couple weeks for the younger people, because for the younger people, I think it makes a lot of sense paying over time. I just had a 35-year-old lady who wants to get it. She's been through it with her family. She's a physician. But she was like, should I do a single pay? I was like, keep that money invested in the market, and just, pay it out of your income, or, just take a little bit out each year. But then in her case, she's gonna be paid off at 45, and then she'll have permanent coverage. She'll be protected for life and never has to think about making the premium payments anymore.
Yeah, that's the thing. Most people, it should be intuitive, but just to clarify, if you pay it over 10 years, that doesn't mean your coverage stops at the end of 10 years. This is lifetime coverage with these types of policies. Of course, your individual plan, make sure that's the case, but everything we sell is covered until you're at least 121 years old. So, Yeah, I mean, I think the the thought process really comes down to can if you can afford a hybrid, the value proposition that you get from it makes it worth it. So people always say, "Well, I don't really need life insurance." And that's true. Most of our clients are high net worth. They don't need life insurance. But this isn't about the life insurance, is it?
It's really not. You always tell people the life insurance, it's like whatever. It's a very small, modest life insurance. It's like the cherry on top. I mean, the sundae, the ice cream, the bananas, the whipped cream, the chocolate syrup. That's where the fun happens. So, life insurance, it's there, and it's not obviously not going to benefit you if you never use it. But again, going back to why people love the hybrids is it's a fixed premium. They're cash indemnity plans. You typically get 6 years of benefits versus 4 or 5 with the traditional plans. And you know, and then you could hire anybody you want. It's cash money coming in. You could spend the money on anything. You could spend it on bills, prescription drugs. You don't have to tell them how you're spending it. That's the key with most of these plans.
Yeah, it's freedom. Freedom, a word we like around here. And then one other one other statement I wanted to make about the 10 pay versus single pay. If you get a comparison quote from us, we're going to run multiple companies across the whole market and we'll send you both. And you can make the determination on which one is better for you. So if you haven't gotten a quote, or if you just have one quote and you want to see a comparison of all the options, that's what we do here at LTC Tree. That's why we make these videos to kind of help people learn how these work and then take the next step, the action step of getting that comparison. It's no obligation. We're happy to do it. We have a bunch of technology that makes it very low friction and easy for you. So if you're curious, reach out to us on our website, give us a call. Either way, we can throw numbers around pretty quickly.
But again, thanks for watching. And if you'd like to learn more, visit us at ltctree.com. Call us. We'll pick up the phone. There's a good chance we'll pick up the phone. 800-800-6139. See you guys.